Hi, I'm Ali Patterson. On this episode of Future Banking, we head to France to speak to Glory Global Solutions about their cash management solutions. We also speak with Chris Skinner about the future of cash as a transaction currency.
Cash will remain because there's no substitute.
We head over to Denmark to speak with Nets about the future of mobile payment systems. And we speak with Karen Walker from First Direct about the customer service. So I've come to Copenhagen to speak to Nets about the future of payment systems.
First, it's tempting to say that to issue a card, to start with that, on a mobile phone is not less secure than issuing on a plastic card. And there are sound mechanisms that can ensure the security on top of that. Sometimes we must do the trade-off between convenience and security. And by that, in practice, many, for example, choose to cap a certain amount and say everything above that needs a PIN code, everything below does not need a PIN code. So that trade-off, I think, is what we see. We saw a study some years ago in the UK showing that 80% of people, when they use cash, they used it on an amount below £10. So, of course, if that's correct, we kind of meet the needs in that way, because that's then 80% of these situations. Here you see that some of the players differentiate a bit. So some choose higher capping than others. I think in general in Europe we're looking at 25 euros as a approximately capping limit. But again, it varies.
So what do banks need to obtain a high-level, long-term customer service?
Customer experience for us is a way of life, so it's about how we do what we do, and we do it well, and we're absolutely obsessed with that. So when we talk about different channels and technologies, for me it's about being able to display the same kind of customer experience across all of these channels. So it's important that we involve with how customers want to use us, but that they always know that they can pick the phone up if they want to. It's got to be channel agnostic. So, you know, it might be a simple transaction that's worthwhile doing over mobile banking. It might be that it's a more complex call, it might be a mortgage call, and they know that they need to speak to somebody about that. So the experience wouldn't change. The experience should always be at the heart of everything that we're doing. Obviously, we just want to be able to give the customers a choice of when, where and how they deal with us, and to make sure that it's a great transaction or a great experience, whatever we do. It doesn't matter what channel a customer uses, it's always really important that the customer comes first.
First Direct always excel at customer service, topping leagues every time. Yet they don't have branches. Is this an increasing trend of branchless banks? So I've come to speak with Glory Global Solutions in France about their cash management solutions.
We are investing each and every year $160 million in R&D, research and development. So this is really key to the group. We secure the future is in the logo, in the brand, and Japanese are very key to invest into future technologies. Glory has always been big in Japan, very big in Japan, owning let's say more than 85% market share, so something quite significant. And they understood quickly that to achieve their ambitions of growth, they had to, let's say, to operate outside Japan. Hence the acquisition, because organic growth was considered to be too long. Glory had a program called Ambition 2018, when the Glory Group will celebrate its first century. So it was important to acquire a company to help reach some other geographies like the US, North America and Latin America, like Europe, where we operate. And today, I would say that 40% of the turnover is made outside of Japan with the acquisition, but the ambition is to have this ratio being a 50-50 in 2018, which would be a real progression. The group, through this acquisition, now operates in more than 130 countries, and there is really a geographical fit. It's clear that we are not box shifters, but we are selling solutions, and service is key for our customers. Bankers are very demanding, And it's one thing to sell, once again, the solution. It's more important to service on a daily basis. So once again, the Japanese understood that they were very strong in their island, but unfortunately less strong outside of it. So the rationale of the acquisition is also this service capabilities that the Talaris group could provide in the equation, if you wish. Talaris used to have this image, if you wish, or reputation of a very strong service company, which was true, by the way, which still is true, and the Japanese had identified it as a very strong point. The rationale is made of those 3 points. First of all, innovation, key to our group. Secondly, geographical reach. And thirdly, this service excellence, which is very key, once again, in the customer relationship. Really, it's all about, can we satisfy the needs of our customer? Can we satisfy our customer? Does the service that we render matches or fits their requests?
How has the role of new technologies and channels such as social media changed over the last few years at First Direct?
We've had to move with the times to make sure that customers can get hold of us how they want to get hold of us. And social media for us is important. Our customers are very early adopters of technology. So it's really key for us that we keep up with what's going on out in the marketplace generally. And actually, First Direct were the first bank to have a transactional banking app. In fact, today we've just launched the iPad app for First Direct. So we do listen to customer feedback, and certainly we look at what's available out in the workplace and marketplace. I think for First Direct, it is about this omni-channel program really, so being able to interact with customers as they choose, but offering the same kind of customer experience no matter how they'd like to bank with us. And that's something that we're absolutely keen on doing, and you know, that's our focus really in terms of social and some of the other technology that's around at the moment as well. Okay, we always train our reps on how they interact with people, interact with customers. So it's how they listen to customers and what they can pick up from what a customer's telling them, and they'll gauge from that what kind of mood they're in, what kind of conversation they're going to have. So whether it's a quick transaction or whether it's going to be a longer conversation about a product. In terms of my role is very much it's customer services director. So actually, whilst previously it's all been based on the telephone and maybe internet banking, my role now is very much responsible for digital, social and telephone service. So it encompasses everything, and my role's grown as the business has grown as well.
In terms of customer experience, an area of ever-increasing importance, what do you think banks need to do to stay on top of this? And how important is technology to achieve this?
We've talked about customer satisfaction for decades, generations, and to a large extent, banks kind of lost the plot on customer focus during the last half a century. The reason being is that they deployed technology to cut costs and primarily to get customers to do everything themselves. So we pushed customers out of a relationship with the bank in a branch to using call centres, ATMs, the internet, and now mobile. And now we're trying to say, oh, we want to give them a delight and a great experience, you know, and reignite the relationship. It's going to be quite difficult because it's been lost, not just because of what the technology deployment did in terms of cost cutting rather than customer focus, but equally add on to that all the layers of what we know about the industry's issues of the past 7 years since the financial meltdown and the loss of trust over mis-selling scandals. So I think there's a real issue there, and what it comes down to for financial institutions is to think about how can you put the customer first and support them through a technology-enriched environment delivered via the Internet of Things around them 24/7, 365. And that's not thinking about, oh, let's try and sell them something. Let's get more share of wallet. Let's get cross-sell and propensity modelling in there. That's, again, thinking about your profit line first and the institution's needs first, not the customer's needs first. So really, if banks want to reignite the relationship, if insurance companies want to get a relationship with their customers, they need to really focus upon what the customer wants and become their trusted advisor. And you know, to get back to this idea of trusted advisor, who do I trust the most? I don't trust financial institutions, I don't trust government, I don't even trust the media anymore. I trust my friends and family, so maybe focus on Facebook and getting the relationship through Facebook. I love the bank in Germany, Fidor Bank, and I keep talking about them in all my presentations because they manage their interest rates on loans and savings based on the number of Facebook likes that they get. And so they encourage their customers to get their friends to like Fidor Bank on Facebook. And the reason being is that every like gets you 235 friends that are being influenced by that like. So if you think about it, they change their savings rates by 0.1% for every 10,000 likes on Facebook. That's actually 2.35 million people that are getting touched by friends to trust Fidor Bank. That's what I mean by getting trust through Facebook. It's not doing it through advertising or through old media.
Last year, the Danes' favourite payment card, the Dank-Ford, passed over 1 billion transactions in 1 year. But will there ever be a future where everything is entirely digital?
First of all, we were very proud when we reached that record with 1 billion. It is true, as you say, that it's a tremendous development that has been done there. On the other hand, we see also that it is quite a huge leap to go to a cashless society. So one thing is to look at the Nordics, but another thing is to look at the southern part, for example, of Europe and how they use cash. If you look at, for example, the Nordics, then from our perspective, we see that 25 to 40% of the situations where you do a payment is still cash-based, while in Southern Europe you can actually find, of course, very much higher numbers. But the interesting thing is to look at those situations where you do pay with cash, and over 50% of them come from two reasons. So one is that it's just quicker to pay with cash, and the other one is that it's no options or alternatives available. And for that reason, we want to introduce a TSN wallet that's kind of maybe equally rapid and fast way to pay, and also P2P solutions, bank account-based payments from person to person, and that can kind of cover the other area where we do not have an option today maybe, and then have to pay with cash.
Checks are in demise, and we've heard that the future is cashless. Yet both of these still linger.
The future of cash is a challenge we are often presented with. If you actually look at the statistics, the actual number of physical banknotes in circulation has increased over the last 3-4 years. One of the things we've seen in the last probably 5 years is that there are a number of consumers who've gone back to actually budgeting using physical cash, primarily driven by economic conditions. It is actually easier, as I think we as consumers would agree with, to budget with something physical rather than something digital. However, what is clear is that the way people use cash, access cash, process cash has changed dramatically. So if I take my home market, the UK, 20 years ago, the way to access cash was probably through queuing in a bank branch. Nowadays, last statistic I saw, in excess of 90% of cash was withdrawn using an ATM. So it's changed beyond recognition. Our job as a technology enabler is to facilitate our clients providing the cheapest possible method for people to access their cash, but without impacting their experience and loyalty to the brand. One of the dangers that we see our clients facing is that as they migrate people away from human interaction to process cash onto automated methods, they also potentially migrate the relationship with that consumer. That is a real danger. The other challenge that I think our customers are wrestling with is that probably every 6 months there's a new payment method comes out, whether it be through the mobile phone, through the iPad, whatever. There are numerous ways of making payments now. However, the interesting thing is they are almost always in addition to existing payment methods, which include cash, as opposed to replacing existing payment methods. So the banks, probably 20 years ago, had 3 or 4 different ways of making payments they have to deal with. Now they probably have 20.
You're often referred to as a sage within financial services. Cash and cheques are quite expensive for banks to use when compared to bits and bytes. How important are cash management solutions as we enter this digital era?
Cash management solutions are still integral and critical for banks, particularly banks that want to serve commercial markets, corporate needs, because corporates, especially retail, obviously are moving around a lot of cash. And although we think we can get rid of cash, as a proportion of payments, it's still actually increasing in terms of volume. And the value is also staying pretty much flat. So Getting rid of cash is going to be a huge issue. It's what's been targeted by MasterCard, Visa, or the payments processing companies. And although we've seen the volume maybe shifting downwards eventually over time to 70% volume, 65% volume, it's still a high proportion of the overall volume of payments. And the reason for that is that there's nothing that substitutes cash right now, not even Bitcoin. Because if you look at any alternative form of payment to cash, it's not anonymous. And even though we think Bitcoin is anonymous, you can trace the flow of Bitcoins through IP addresses and where they've been used. You can't do that with cash. Cash is a complete, instant, trusted value transfer that has no digital equivalent. And in fact, I don't think it ever will have a digital equivalent, because once it's digitized, it's auditable and traceable. And that's why people like cash. That's why money launderers and drug users use cash. That's why 90% of American dollars have cocaine on them, because they're used for snort cocaine. You can't get rid of that form of currency easily. Now you can get rid of checks, because checks was just a paper substitute for cash introduced in the Industrial Revolution. You'll get rid of plastic, because that was just created as another form of cash for the services revolution when people moved to offices. So chips will get rid of checks and cards, but cash will remain because there's no substitute.
There's been a lot of talk around IT systems and legacy issues, particularly around agility within these. But what does this mean from a payments perspective?
In the way we look at the world, so to say, I think it's needed to split between the front-end side and the back-end side, if you look at the banks. And on the back-end side, it boils very much down to whether you're able to meet the facts that these structural changes that is going on among the banks, in the way that, for example, IT legacy systems are now being there for 30, 40 years. They are more and more tricky to develop and maintain. And if you then add new requirements on compliance and so on, you have a true pain for the banks, which it represents. So the structural change for many banks, as we see it, is to get out of that pain and do something with that themselves, or using other partners that can ensure them safety, because this is an important area of their banking business, but also at a lower cost level, as the pressure is on that as well. So on the back end side, that I will say is number one. On the front end side, I think it's something else that's the structural change. And that is the fact that, first of all, there are different success factors from the front end to the back end. Here, agility, innovation, the ability to bring new solutions quickly to the market is key. And we see a lot of new entrants. They are not replacing the existing infrastructure, but they are diluting it. So the banks, as we see it, also want to compete with them on this field, which is natural, because this is kind of where the battle for the customer is. And we, as Nets, want to make them good in that context. We then often go with white label solutions, making them a player in that field. But I think then the front-end side is much more about how you respond to these new entrants and players. And the back-end side is more on how you can help banks renew their back-end payment IT systems.
Customers expected to be treated individually with a truly personal and customized service. How have you seen the needs and demand of customers change over the past few years?
It's very interesting, because today it's clear that we live in a society where the customers are more and more demanding. We live in a 24/7 society where nothing is new for too long. There are many new technologies. I think what the customers really want is a customer experience. So when they go to the branch, it's never been easier than today to change a bank. You can do it very quickly. So how can banks create loyalty with their customers? How can they satisfy the need? And we believe it only happens through a positive customer experience. It's clear that the bank has to get rid of most of the automated low-value transactions to focus the time of their people on customer care, as I would call it.
On the next Future Banking, we speak with Barclays and Fiserv about the future of mobile technology. We also speak with Truphone about BYOD.